Welcome all. We will get started in 1 minute. Just a reminder, if you're not speaking, please be muted. Hi guys, hello. So welcome to the first $0 risk meeting. The purpose of this meeting is to analyze both zero and the sovereign dollar and make sure that we're able to continue to grow them while maintaining the peg, reducing risk to the entire protocol and to the users of these systems. Specifically, we have two primary goals. One is to make sure that the peg of sovereign dollar is maintained. And the second priority, but less important, and we can discuss that in a moment, less important is to make sure that we keep redemptions to a low level. So the reason the peg is the core priority is because the ultimate product here is the stablecoin, and stablecoin holders should have stability and reliability, and risk should be minimized for them. Our goal as a protocol, as a community, as developers, is to create sound money. On the other hand, those who take out lines of credit, they are assuming a degree of risk, and they do so knowingly. And so while we want to minimize the redemptions, we never expect to get redemptions down to zero. That is part and parcel of what happens when you are using zero. Now, we don't want redemptions to occur because one of the reasons that people use zero is because they want to keep their Bitcoin but also gain access to the liquidity. If they didn't have zero, they would have to sell their Bitcoin. When a redemption happens, it effectively reverts them to the situation that they were in earlier of selling their Bitcoin. So they haven't experienced a loss. However, they haven't achieved their goal. And so if we want them to maximally achieve their goal, we also want to reduce the potential for redemptions. And how this plays in is that ultimately what this requires is a balance between the supply of sovereign dollars, which at the moment is primarily from ZUSD or from zero, and therefore anyone who's borrowing is a supplier, they're issuing, and the demand, or the people who want to hold sovereign dollars. And those two things have to be in a degree of balance in order for there not to be too many redemptions and in order for the peg not to rise significantly above $1. Okay, so the purpose of these calls is for us, those of us who are interested in being engaged and involved in these questions, to be aware of what is occurring. And we expect to have these calls initially on a weekly basis because the system is still quite new. It is getting its footing. It's still maturing. And then as the system becomes more mature, probably have them less frequently, but continue to have them. And our goal is to provide a way for all of us as a community to discuss what steps we want to take on the basis of what we observe over the course of a week. And now The sovereign dollar has been out for a week, or not quite a week. On Thursday it will be a week, so maybe half a week. And with it, we've also had open access for zero. And what we observed was an increase in the number of lines of credit, an increase in the amount of borrowing, an increase in the demand for sovereign dollar, primarily in the sovereign dollar BTC AMM pool, and as a result, concurrently, a significant increase in protocol revenue. We also, 2 days ago, observed the first redemption that we saw in well over a week. It was a redemption of 1 Bitcoin, almost 1 Bitcoin worth. And actually, let me try and bring up the monitoring system so we can all see what I'm talking about. So, can you guys see my screen? Excellent. So, what you can see is currently have a total collateralization ratio of 277%. That's quite healthy. We have 201 lines of credit, origination fee of 2.52%, which means that there was a redemption. And we can see that redemption if we scroll down in a few places. First of all, we can see it right here. We can see the time and the transaction of that redemption. And we can also see it here, March 19th, there was a redemption of $27,000 or close to a Bitcoin. And it also shows up over here in redemption fees. Now this is okay. This is perfectly good and acceptable behavior for the system. So what is worth noting, and maybe I'll just also show, in case you guys are not familiar with this, we can see the number of lines of credit was decreasing when we stopped allowing open access, is now starting to increase again. Total outstanding debt obviously increased as well, going from 6.6 million to 7.3 million, right? So almost $1 million increased borrowing, and the total amount borrowed over time has been close to 11 million now. But what we noticed, starting around early yesterday, was that the price of ZUSD started to be lower than the price of XUSD, or the implied price of ZUSD was less than $1 in our AMM. And the reason this most likely was occurring was because there were people who had created about $1 million of new ZUSD supply. Much of it had flown into the AMM, but some of it was being converted into Bitcoin because people want to borrow with their Bitcoin to buy more Bitcoin. And so over time, that sell pressure created a scenario where there was the potential for people to want to start making redemptions. And so what we've done as the exchequer is we've introduced an ARB bot, and that ARB bot has effectively been selling BTC from Treasury and buying sovereign dollars. And that started last night UTC time, and over the course of the next roughly 12 hours acquired about 2.5 Bitcoin from the AMM. So that was actually much more rapid than we expected. Acquired 2.5 Bitcoin worth of sovereign dollars. Okay, so what that tells us is that if there continues to be a large amount of issuance of sovereign dollar without commensurate demand, then we could enter into a situation where there becomes more desire and more pressure to use redemptions. Now, this is not unanticipated. There's a number of things that are expected to happen over the course of the coming weeks, which significantly should alleviate that pressure and help drive reliable demand for sovereign dollars. Among these things is the introduction of rewards for participating in the stability pool, incentive curves. Sorry, thank you. Incentive curves being introduced by Babelfish, potentially the introduction of a sovereign dollar lending and borrowing pool, and so those measures will generate additional demand, and that's in the short term. In the longer term, of course, it is to find more use cases, list on more exchanges, have more projects using it, etc. But we anticipate that especially the subsidy to the stability pool could actually generate very, very significant amount of demand over a substantial period of time and allow the system to organically grow. However, it will be 2 or 3 weeks before all of those measures are in place, maybe longer, although currently we anticipate 2 to 3 weeks. So one of the questions is, what shall we do about this? And that is the type of question that we should be asking ourselves in these meetings. We have the ability to change various features of all of these systems with a SIP. So, for example, and this is the current recommendation from various members of the core sovereign team, is that what we should do is have tomorrow a SIP in which we increase the origination fee, the base origination fee, from 2.5% to 5%, with a maximum origination fee. If there are any redemptions, the origination fee would grow up to 7.5%. And this would probably slow the issuance of new sovereign dollar until such time as we are in a position to implement the other services which will drive sovereign dollar demand in the short and medium term. And so that's one option. We can discuss some of the other options, but that is an introduction to what we're currently looking at, what we're currently seeing. And at this point, I'd like to open it up to comment and conversation or questions. Oh, one last thing. Obviously, the goal of this call is for us to try and come to, or at least be able to make a recommendation around the SIP tomorrow, if there are any aspects that we would like to modulate, or, for example, move forward with what some of the core team members are suggesting, which is an increase of the base origination fee. So, are there questions, comments, thoughts?
Hey, Jago, would this
Yes.
just be the origination fee, or would it also be the redemption fee that would be increased?
Okay, so I think that's a great question. So let's talk about the cost of doing this. Right, the primary cost in doing this is that it makes the peg softer. Right, so if origination, so how is the peg on the sovereign dollar or ZUSD and the sovereign dollar maintained? If the price rises above the peg, then it becomes very attractive to issue. So for someone to go and effectively against their Bitcoin borrow new stablecoins, because they're able to sell them on the market for more than $1, right? And so they basically make free profit arbitrage. And on the other hand, on the downside, if the peg is trading below, then it becomes potentially profitable for people to redeem. The more we widen the origination and redemption fees, the softer that peg becomes. So the current recommendation is not to increase the redemption fee, because our whole goal here is to maintain stability, and our view is that while we are willing to accept the price rising above $1, because a holder of the token isn't really going to mind their token being worth more, there's obviously people would not tolerate a stablecoin which is worth less. And so we don't want to soften the peg to the downside. We would prefer to soften the peg to the upside. And that is why the current recommendation, which is being proposed, is to increase the origination fee, but not the redemption fee.
Just a quick question on that. I assume that means that the contracts allow for separate settings for the floor for redemptions and origination fees.
That's correct. We are able to modulate 4 parameters: the base origination fee, the max origination fee, the base redemption fee, and the max redemption fee. So when redemptions occur, the origination fee and the redemption fee will both increase from their base fee towards, slowly and on an asymptotic curve, towards their max fee. And so we're able to choose those 4 parameters. We're not able to change. We would potentially with a SIP be able to change the asymptotic curve between them, but that's a much more significant change. So the 4 parameters we can play with are the base fee and max fee of both origination and redemption.
Okay.
Oh, and one other thing that's worth pointing out, of course, this does not impact borrowing that has already occurred. It only impacts new borrowers, right? And so it doesn't change the rules on those who are already borrowing. It only changes the entrance fee for those who would be potentially new users. Next time we hope to have more graphs and better visualizations of these things. This has been pretty, we've a lot has happened, so we didn't manage to get that done for this call.
I have a question. Where can we currently track, or is there a place where we can track the price of the dollar?
So the easiest way is to go to the DApp and seek to convert sovereign dollar to XUSD. That is the easiest way to do it. Another way to do it is to look at the market price of BTC and compare the price that you would be getting in the sovereign trading pool, right? So if you were trading sovereign dollar to Bitcoin. Neither of those is the perfect representation of the price, but it's worth pointing out that there is no such thing as a price. A price is not an objective sort of object. It is a relationship. And so in exactly the same way that you have the price of Bitcoin on Binance being different from the price of Bitcoin on Coinbase frequently, there's no single price. And so ultimately the real price, right? The real peg is the question of how much Bitcoin people are able to redeem for, and that stays the same. So the peg itself doesn't really break, right? People can always go back and redeem for $1 worth of Bitcoin minus the redemption fee. But we want to avoid those redemptions. And so what we're trying to do is monitor the implicit prices that we're seeing sort of in the trading venue for forward leading indicators that potentially people would want to start redeeming.
Hi, I just got a quick question. At the start,
I would just request if you guys can introduce yourselves before speaking, because otherwise I don't know who's talking.
sorry, my bad. Yeah, this is Aaron. And the question I had was, at the start of the call, you mentioned that there was a couple of solutions, and I think the one mentioned so far is in relation to changing the origination fee. Just wondering what other solutions there were as well.
Well, in the short term, what we're currently doing is we've dedicated a certain amount of exchequer funds to effectively arbing the difference. And so, as I mentioned, we've purchased the Treasury has sold about 2.5 Bitcoin and purchased about 2.5 Bitcoin worth of sovereign dollar over the last now almost 24 hours. So that's one thing that is already occurring and likely would maintain and will maintain sort of the price stability that we would like for as long as we were doing it. We don't want to do it forever because it's not organic, and B, treasury funds are limited. But one other thing to note is you can actually see it. So there's been no attempt to sort of hide the activity of this bot. It's making purchases at exactly 0.03 BTC each time, and so you can just see on the blockchain the acquisitions that it's making. The other thing, and this would be the best solution, is for more of us to hold sovereign dollar. Right. So one of the best things you can do for the ecosystem, for sovereign, one of the best ways you can show support, and one of the best ways you can support the growth of zero sovereign dollar and maybe of bag, is very low risk, which is to simply hold sovereign dollars, which are always redeemable for their value in Bitcoin. Because what we're trying to kickstart is exactly that behavior of people starting to hold more of the sovereign dollar and less of bank dollars, which are not self-custody, they don't have direct control over, or things like USDC and Tether, which we're, I think, very familiar with the risks involved in them. And so that's a behavior that we need to calculate and see the community do. The community is quite large. You can see, just in this call, which is a pretty technical call, we have quite a number of people. And so if each of the people on this call started transferring a percentage of the funds that they just hold in dollars anyway, that would buy a significant amount of growth runway. And then the third thing that we can do in the very, very short term is increase that origination fee. Increasing the origination fee, obviously, will reduce the borrowing and as a result likely reduce protocol revenue in the short term. And also, as I mentioned, there are a number of longer term or medium term things that we expect to come online starting 2 weeks from now and 3 weeks from now. But certainly this is a great opportunity to encourage everyone, I think, for lots of reasons, because you would be supporting the protocol, because you would have self-custody, true decentralized dollars. Everyone should try and hold a small portion of the dollars, or maybe even a large portion of the dollars that they have on hand in sovereign dollar.
A couple of quick comments on that. First of all, I think it may sound undesirable to just hold dollars, but given the threat to the banking system right now, it's really not a bad idea to just simply to have this option to hold dollars. Right now, I don't have a whole lot of dollars in my fiat bank account, and I sleep better at night that way. Second thing is, I put a note in the comments on how you can check the price of sovereign dollar. So if you want to go check those notes, that's one way to do that. So just add a little background there.
One other thing which I forgot to mention, and thank you very much for that comment, One Digit. But one other thing which is a strong use case for ZUSD and sovereign dollar right now is the zero stability pool. A zero stability pool, for those of you who are not familiar, what it is that you take you either convert sovereign dollars into ZUSD or deposit ZUSD directly into the stability pool. And what the stability pool will do is it will perform liquidations of positions that need to be liquidated. Now, this doesn't happen every day. In fact, if you guys look at the data dashboard, you can see that sorry. So this is the liquidation profit, and you can see it's extremely spiky, right? When it happens significantly. Now, the liquidation profit culminatively since the launch of the system is $18,500. For most of the history of the liquidity pool, it wasn't that popular and held less than $200,000 in it. And the profit that you see here, this is profit from those liquidations. And so you can see that in the period really starting around July, that those $200,000 made a profit of 10%, which is annualized 20% profit, and you're effectively buying Bitcoin at a discount. Today in the liquidity pool, because of the launch of the AMM, we saw flows. We actually saw just before the launch of the sovereign dollar an increase in the stability pool to $700,000, and today it's dropped to $340,000. Most of those funds have flowed into the AMM for the higher yield. But I think what people perhaps are not recognizing is that the yield on stability pool, even at these levels, is on par with the AMM, which currently the AMM is around 40% APY. This is providing at these levels around 35% APY. Just based on these numbers, we've looked at historical numbers and we actually expect them to be higher than this, but on a spiky basis. And what you're getting is Bitcoin, and the risk profile is much, much, much lower than the AMM. There's no impermanent loss, so it's an incredible deal. And one of the easiest ways to drive demand is, and this is something we're going to help educate about, is the stability pool, participation in the stability pool. And any funds that flow into the stability pool are effectively an additional source of demand for sovereign dollars.
Yago, this is David. Have we considered maintaining the origination fee, but dropping the redemption fee, and be willing to bite the bullet on some redemptions happening?
Sorry, is the question, have we considered it?
Yeah, I mean, I think the only options that we've really discussed are increasing the origination fee, which would stifle, lending and revenue, which I don't think is great.
Yes.
I think if we keep the redemption fee at 2.5%, it's that perpetual, 97 cents, 97.5 cents that people just don't want to arb down. So I think the solution is to reduce the redemption fee a little bit, to keep the origination fee at 2.5.
It's not clear to me. I'm not sure I'm understanding. How would reducing the redemption fee? So what you would like to encourage redemptions?
Just to close the deficit. Yes, I mean, the whole point of the redemptions are when the peg trades below $1, and people can redeem redeem against the lines of credit, and then push the peg back up towards $1. But if it costs, if it costs 2.5, nobody's going to do it.
Well, I mean, whether or not people will do it, it depends on where, sort of what the market equilibrium price is, and whether it is below the redemption price. But look, that's certainly an option, right? We could say basically let it rip, right? let people redeem as much as is necessary. That is the risk that people are taking when they're opening lines of credit. My sense is, and I'd be interested in the views of the people on this call, my sense is that that creates a bit of an Ouroboros, a snake that eats its own tail. Because what happens then is the likelihood of, or even just the risk profile in terms of what people think about when they think about zero is, I'm supposedly borrowing against my Bitcoin, but I might as well just sell it because, or I could just sell it because the redemption is effectively going to act as if I had chosen to sell my Bitcoin. And so zero as a product becomes a less reliable alternative to selling your Bitcoin and a less reliable way to hold on to your Bitcoin. And I think one of the values that we're trying to build for is for people to be able to live their lives on Bitcoin, live their lives without having to sell Bitcoin, and basically hodl their Bitcoin. And I think that would be defeating that purpose. Now, but I mean, your argument makes sense. It's just a question of what we're prioritizing. And I think it would. One other point I would make here. The cost benefit ratio here is, do we want to slow down significantly the issuance of new debt, or do we want to allow redemptions? And I think that if we allowed a lot of redemptions, we would also be slowing down the issuance of new debt, because faith and reliability in the zero protocol would be reduced. And so I think we would be paying both prices if we went down the route of paying the redemption price, whereas if we, on a fairly temporary basis, temper originations, that would be the only price we'd pay. We'd pay the price of growth, but not the price of growth and reliability. David, would you like to retort?
Yeah, I mean, I think your points are valid. It's a lot of stuff we've talked about over the past several months, but I think I'm proposing some sort of middle ground where we keep the origination at 2.5%. We push down redemptions just a little bit, just to like 1%. And then the natural market clearing price will be, 99 cents for ZUSD. And that may be close enough to where it becomes a shelling point where people will just kind of keep it at $1 because it's that close. But I think when the natural price is 97.5 cents, I think that's too far away. And it's just kind of like a mental gap for people to not want to push it back up towards $1. On top of that, we wouldn't stifle borrowing as much anymore. So we keep revenue high. And there still is a barrier to redemptions. It wouldn't be this free for all where we've lowered the redemptions back down to the base rate. I just, I think maybe we explore this for a week or two and see if that is potentially a nice middle ground for us.
Is there anyone else here who would like to either support David's view or reject it or offer, their opinion on the mini debate that has occurred?
Yeah, I'd like to say a word or two about that. I generally resonate with what he's saying. I think, first of all, I'll say I'm really glad that you're only considering raising the origination fee instead of both origination and redemption. I think raising the redemption fee anymore is going to be very harmful. I'm also glad to know that it's possible to do that separately. I wasn't aware of that. So, the question might be, is it okay where it is, or should it go back up? But I also think that if you understand the dollar that you hold, sovereign dollar that you hold, as only being guaranteed to be swappable for 97.5 cents of worth of Bitcoin, that's an immediate disincentive to hold it. And what we're trying to do is make it attractive to hold. And so, I personally have put in a good bit of money into that, and am holding it that way. But it has been a concern to me that all of a sudden my ZUSD/dollar is worth 97.5 cents per dollar. And so I think it makes it less attractive to hold, which is what we're really trying to do, is make it as attractive as possible to hold. So another thought I have, kind of tying into that though, is another way to approach this, rather than raising the origination fee, I think the real problem here is that we have a lot of people who naturally see this as an opportunity to raise some cash and offboard it and do some cool things with it, like make a down payment on a house or buy a car or something like that. And so they're naturally trying to offboard or off ramp. And so that is what is, and the only way to, because of the lack of stable coins and Babelfish, the only way to effectively do that is to turn around and buy RBTC and then peg out or fast BTC out to Bitcoin and then cash out your Bitcoin. So that's putting a lot of pressure on the price of the RBTC dollar pair, so that RBTC is going up because everybody's buying it in order to off ramp. So I think that's where the pressure is coming from. And of course, one way to reduce that pressure is to make it more expensive to borrow, so it's just not happening as much. But another way to do that would be to calculate for users what the actual cost is of off ramping. If they understood that taking out the loan is not the only cost, they're actually going to have to go through the AMM. They're going to incur slippage. They're going to incur possibly a price premium for RBTC, and those two things together might suggest that they not use zero for that use case at the present time. So I think maybe if instead of manipulating the rates, we just educated users by presenting them with the actual cost, it might discourage that particular use case and encourage people to consider other ways to put zero to use within the ecosystem. So that's just another approach.
Thanks, One Digit. I actually have done a back of the envelope calculation on what the typical cost of acquiring Bitcoin and off ramping it is, given the typical size of borrow that we see. Now, this is not a rigorous analysis, but back of the envelope, and it's just under 1%. So there's the 3.5% fee on the AMM, the 0.2% off ramping fee. That brings us to 0.55, and then slippage of close to an additional 0.5%, just under. So we're looking at an additional 1%, which I think we need to have would be ideal to have a more rigorous view on, but that's what it looks like.
Well, and also plus any offset just due to the sell pressure on sovereign dollar.
Correct. Right? Yes. So perhaps I can try and synthesize what you guys are saying. Maybe there is, maybe the way we should think about it is reduce the redemption fee. And David is suggesting keeping the origination fee where it is, but perhaps we can reduce the redemption fee, but increase the origination fee. And then it would address, I think, One Digit, what you're saying, which it becomes even more attractive to sort of hodl sovereign dollar, because sovereign dollar is likely to float somewhat above par. Any thoughts on that?
Yeah, I mean, I think we're on the same page. I definitely think One Digit made a really good point that, as soon as new users come to the protocol and they see this ZUSD or dollar thing trading below $1, it immediately turns them off from using it. So, yes, I support reducing the redemption fee. If we want to raise the origination fee, I'm open to it, but I think I'd rather not yet do that. And then I think that will allow us to bring everything to kind of a closer state that we're looking for. In worst case, we reverse it next week.
Okay. I think what I would suggest is I would prefer, given that I think there's in the relative short term the ability to create additional demand, maybe to suggest the following, which is reducing the redemption fee, increasing the origination fee to the proposed 5%, so that we at least get some respite for perhaps a week. And in the meantime, introduce the dollar lending pool, which could become quite attractive because it becomes more attractive to borrow that way than from the zero protocol, that can help drive additional demand through funds held in the lending pool, as well as might create some opportunity for people to take advantage of the floating price. We could then perhaps observe for a week and then decide whether or not we want to consider reducing or maintaining the origination fee at 5%.
I'm open to whatever the community wants on that. I personally think 5% is too much of a shock factor. It's too high. I also kind of reject the notion that we say, hey, it's still 5% compared to like Unchained Capital. Like, we have to stay competitive with the broader DeFi market, which 5% is exorbitantly high in my opinion. But I'm not going to, die on the hill on that one.
Is there anyone on the call who currently is considering opening a line of credit or currently has a line of credit who perhaps let's start with, is there anyone who has a line of credit and is on the call that would like to can perhaps speak to how they view redemptions?
I'm pretty scared of redemptions. I do not like to see them, so I would like to keep them very low.
Thank you. Who is speaking?
This is Hekro. Hi.
Hi. Okay.
Hi, this is I'm sorry.
Sorry, yeah, no, this is Aaron again. Personally, I think that redemption shouldn't be something that can creep up on a user of Zero and then have their collateral removed. Really, it's not something. I think it's not something that users expect. We direct users to the wiki to read through the wiki and to understand, but I don't believe a lot of users get it. And a lot of users will just see keep a collateral ratio of 110% or keep a collateral ratio above 150%, and then you should be free to borrow. And I think that stings users. So I think if we were to still run into an issue of users being redeemed against, I just don't think it works well for the protocol at all. So I think anything to reduce that effect, even in the short term, and then this is something that can then be checked again in a week's time, is probably the best way to go personally.
One other data point, thanks Aaron. One other data point that might be interesting is yesterday I had a conversation with BlockFi, who are looking to offer this to their customers and act as effectively a channel, and not BlockFi, Blockware. And what they're looking to offer is the ability to buy mining rigs with your Bitcoin by borrowing against your Bitcoin. Yesterday, I described to them the fact that the origination fee might be as high as 5% or might go up to 5%. And they seemed unfazed. So they said this might not be attractive to some of our users, but for other customers of ours, they might still want to do it. So it might be, and I think here I have a bit of a difference of opinion with David. I'm willing to have a period where it is more expensive. Generally, I think it's not necessarily bad practice that when you have an early market, you get demand. The first demand you get is the those who want it the most, and they have the highest willingness to pay. Not necessarily sure that that's a bad thing. We want to get to a much larger market, but that is something maybe we grow into rather than need to get immediately to. David, since you have an explicit difference of opinion, would you be interested in commenting on that?
Yeah, I mean, I'm sympathetic to that side, but again, I just feel that even if we reduce the redemptions to 1%, we're still stifling the overall redemptions would happen. We're not opening up the floodgates and saying, hey, it's a free-for-all. We're going to see tons and tons of redemptions. It's still sufficient enough to push people away from redeeming against the lines of credit, but it is enough to bring the peg closer to $1. And I think that is of paramount importance for this protocol, for saying, hey, this is a stable coin. It's close to being worth $1, to give people the assurance that when they borrow it, that it's not going to be worth less than $1. I think it's the right balance, and I'll just leave it at that.
Hi guys, this is Debo. Second, and I'm a user, relatively heavy. Just the one thing that I fear, redemption.
Please go on.
I would be happy, not happy, but I would to have the security up. So I use call fairly heavily. What I'd be paying for is faith in my tact, function with it as safely as possible. But the idea of getting probably
Debo, I just want to let you know that I think we're struggling to hear you. You're breaking in and out.
Oh, I'm sorry. So can you hear me better now?
If you can try again.
How about now?
That seems to be okay.
Okay. I was just saying, and I would be willing to pay more. I understand I would pay more security that I would avoid being against. It also
We're still having the same problem. You may want to try to either move closer to your microphone or eliminate some background noise. I think it's the noise canceling.
Debo, we can't really hear you, but there's a chat box in the corner. And so if you could affirm yes or no and maybe write out, if I don't get this right, what you actually think. But it sounded like you were trying to say that you would be willing to pay more for being safe in the knowledge that you would be unlikely to be redeemed against. And if you maybe you can just say yes or no, and that would be easier for us to hear. Now you're muted. Wink twice if they've got you. All right. What I propose is what we'll do is we've opened up a thread where we announce this meeting in the forum. We will post the recording of this conversation there. We will post a link to the dashboard, and that will allow us to open up conversation. And then I think we will look to quite swiftly, on the basis of what we're seeing emerge in that conversation, move forward with a SIP proposal. Is there anyone who would like to add anything before we close?
Just a couple of quick comments in response to Aaron about the redemption concern that it would sneak up on users. I've tried to add more things into the wiki articles and strategic places to warn people about redemptions, and also have made a suggestion that we add another notification to the DApp where users can specify that they want to be notified if they're in the bottom 5% or something like that of the uh, collateral ratios, so that, or bottom 5% in terms of the minimum redemption buffer, so that they would know they're in more danger of being redeemed, and they could act on that to either pay back some of their loan or add some collateral or something like that. So that might go some way toward, at least, if people will turn on that notification and then receive that notification, hopefully it would be enough in advance so that at least they're not taken by surprise when it happens.
Thanks for that. Just to say, I think I put a suggestion in the Discord yesterday that I think Sobit is looking into in terms of adding messaging to the section of the DApp where you open a line of credit, which I think would also be handy as well.
I agree with that.
Anyone else would like to comment?
So I've got something that may be of indirect consequence to the DLLR debacle with it, maintaining its peg and so forth through zero loans and redemptions and so forth. I noticed that in the portfolio section. So if I were to go to my portfolio section, let's say, for example, I wanted to bring across or convert, XUSD to DLLR. If in fact I put in, $1, it is, quite close. But say I wanted to bring across $100,000 or $10,000 or, a larger amount, the slippage becomes significant, becomes very tremendous. Like, for example, on a $100,000 amount, we're looking something to the order of about 10%. And if it's a stable coin and converting to another stable coin, I know for example, with XUSD and RUSDT, we had the option of converting on a one-to-one for one stable coin to the other. So I'm wondering if it may mitigate some outside influences to moving the peg on the DLLR, if we were to initialize something to that effect, where DLLR could be converted one-to-one to either another stable, or even if it's sends back by RBTC, if we were able to convert it one-to-one for RBTC, well, not one-to-one, but you know what I mean, without there being slippage, because as a stable coin, it shouldn't be subjected to slippage. Or am I off in that thinking?
Well, that's effectively the entire conversation. Is how we maximize the equilibrium right now, and that's a question of supply and demand. So as opposed to XUSD, which is a wrapper for the stable coins it receives, sovereign dollar is not. It's its own stable coin. So there's no way of enforcing, as you sort of, in the way that you're suggesting, the price. The price is market driven.
Got you. I assume that was the case, but I was just wondering if there were, options to trying to reinforce that. But I understand where you're coming from.
All right. I think we'll bring this call to a close. As I say,
Yago, can I make another quick point? I'm sorry to jump in. One of the concerns that I have is if we say we're going to raise the origination fee to 5% temporarily, then people are just going to wait until it's over. If I thought that it was going to be 5% for the next 2 weeks, I'd wait till 2 weeks was over. So I think we have to factor that concern into any decision we make.
In a way, that's what I think we're trying to, or what I would like to achieve, is effectively, I want to modulate. I would prefer for them to wait until we have additional sources of demand that come online.
I think the advantage of what I was suggesting of educating people would better distinguish users who want to go ahead and do something and maybe buy Bitcoin or put it in the stability pool or something like that right now versus those who are trying to off ramp and are getting the price out of alignment that way. So just a thought there.
Okay.
I would just want to share two small thoughts. One on this topic directly, and the other on what Scotty said earlier.
Aurora, if you could just introduce yourself, so in the recording, people know who's talking. So Aurora.
Oh, sorry. Yes, it's Aurora. All right. So I think that the 5% origination fee will help us a lot when we are launching additional pools which can absorb DLLR, because if we are introducing these pools and there are subsidies for those pools, or they're just in generally economically attractive, then people will want to deposit sovereign dollar into the pool. And now, if we have a rather high origination fee, people would rather buy it off the market, which is exactly what we need, because currently we are selling Bitcoin into the market to buy sovereign dollar, and it would be good. Like additional pools and a higher origination fee would allow us to stop this, because the sensible thing to do is to buy the DLLR cheap on the market and to deposit it then into the pools. So I think that we have that this way we create the demand which we are requiring. And if we should see that the price shoots into the other direction, that the DLLR is trading above $1, then we can consider to lower the origination fee again. That's my thinking here.
Thanks very much, Aurora.
Just one. I know you want to leave. One more thing regarding Scotty's comment. It is possible, if you know how to convert one XUSD 1-to-1 to one DLLR, because both aggregators hold ZUSD. So you can redeem on XUSD for CUSD and then afterwards deposit it into the sovereign dollar. And this way you will not have any slippage. It does at the moment not work the other way around, because CUSD deposits are still paused on XUSD. I guess that once the incentive curve is finalized and XUSD is updated and the sovereign dollar is added, we can offer much more attractive conversions between the stablecoins.
Thank you, Aurora.
Okay. So originally we had timed 45 minutes for this call. It's been an hour. And I think what we need to do now is move towards making a decision. I think the format for that is going to be the forum. And so, like I say, we will post the recording of this conversation to the forum. We will also post a link to the dashboard, and likely tomorrow morning a SIP will be proposed on the basis of the conversation that we see. So I'd like to thank you all for your participation. I think this has been an extremely illuminating conversation. I think I'm leaving convinced that we should reduce the, at minimum, we should reduce the redemption fee. And I look forward to your participation and conversation in the forums. Thank you very much, everyone, for joining. Stay sovereign.
Thank you. Cheers.
Thank you.
Thanks, everybody.